For more perspective on OPEC, CGTN's Rachelle Akuffo spoke to Kent Moores. He's executive chairman at the Global Strategic Investment Institute. And Rachelle began by asking him about expectations to extend current cuts to support oil prices.
This is going to be a more contentious meeting than people had originally anticipated. There is some rumblings inside OPEC, and there are also some questions from Moscow. So as a result, OPEC Plus itself is now feeling some difficulties in coming up with what I think is still going to be a 3-month extension of the existing cuts. To put this in perspective, if what it is that OPEC Plus originally had called for, namely a 2 million barrel per day increase in production in January, that probably would have brought Brent prices down below $40 a barrel. If we continue the current cuts for 3 months longer, that's probably going to put it in about $50 a barrel. And if it's extended to 6 months, which I think is a bit less likely, that's likely to put it in the mid-$50 range. Now, the important thing to remember here, Rachel, is that demand is beginning to kick in the expectation that virus will be in check. There will be vaccines available probably within the next 6 months, and that will be extended largely globally. So this is basically a holding action, and the question is whether or not OPEC Plus can pull it off.
Because we are seeing some concerns we saw from Iran questioning this idea of having this sort of one-size-fits-all approach when you do have so much fluctuation, and we're also seeing the strength of the US dollar starting to tip as well, and of course ongoing geopolitical issues. So what's your take on the pros and cons of having a sort of one-size-fits-all approach?
Well, I think realistically that's about the best OPEC Plus can hope for. To begin with, Iran and Venezuela and Nigeria are pretty much exempt from what it is that OPEC Plus is doing. Even though they are members, they're not subject to the cuts. We do have some increased production coming back online in Libya, although I think a ceiling is going to be manifesting itself there rather soon. They're up to about 1.25 million additional barrels a day. I don't think they can get beyond 1.3. The increased demand coming on the market is likely to be able to absorb a 2 million production barrel per day increase, but not for about 6 months. And so it's a narrow window that OPEC Plus has to be looking at.
And what are we seeing in terms of demand as you look ahead?
Well, demand itself is a factor that's effectively COVID-related. Now, this is both the actual impact on reducing overall economic activity worldwide because of the virus, and it's also the market's perception of what it is that may mean for oil prices. And until recently, that latter factor has essentially allowed a greater use of shorts with future oil prices, future oil contracts. That has begun to end over the last couple of weeks. Brent is up about 26% for the month. WTI in the United States is up about 25%. So that makes it exceptionally difficult to be able to short the commodity moving forward. The demand is likely to spike, and in Asia more than elsewhere in the world. It's actually the Asian market that everybody's looking at now. And it's the Asian market that will determine how long these cuts will remain and whether or not the production increases will actually take hold.
Now, another factor in this, obviously, the U.S. resurgence for shale drilling. What sort of impact do you expect that to have on some of the decision-making?
Well, OPEC Plus looks over its shoulder. In the past, what OPEC would do is this. It would determine what a monthly demand looked like worldwide. It would then subtract from that non-OPEC production. And what was left was something called the call on OPEC. That was what OPEC was supposed to deliver for that month. It would then be divvied up among the members. Well, that call on OPEC progressively has ended up becoming a call on shale, because U.S. shale production is essentially the flip factor in international oil markets. Everybody knows this. OPEC Plus knows this. The U.S. production is running at about 10.5 to 11 million barrels per day, and over 3 million now per day is directly into international exports. That's what OPEC is primarily concerned about. If OPEC agrees to maintain its current production cuts, there's no way that they expect that American shale production will go along, and as the demand kicks in, more of that global market will be benefiting American producers rather than producers elsewhere.
Now, some people have been wondering, just quickly, in terms of questions about OPEC's relevance, do we still need it? Does it still serve the same role? What's your take on that?
Yeah, I saw the Goldman Sachs report that came out recently questioning whether OPEC is still relevant. It is still relevant for this reason. There is no other forum in which the major producers in the world can get together and set up an overall basic strategy. Now, the U.S. does not have a national oil strategy, and it certainly does not have a national state oil company. And so as a result, they could never operate the way OPEC plus nations would operate. On the other hand, OPEC plus nations have no other recourse than to come up with a consensus among themselves about what that market is going to look like and how to divvy up the exports within it. So these are always two ships passing in the night, U.S. production on the one hand, OPEC plus on the other, and they're not really on the same wavelength.